Okay, we are live. Welcome everybody to this new Tight Master session. We are live on several platforms on Facebook, on LinkedIn, on YouTube, even on Twitter. And we are again joined by Jonny Boström from Move by Numbers. Hey Johnny, how are you?
Hello, Stefan. It's great to be back here. I'm
Yeah,
fine.
absolutely. Thank you. Thank you for being here. And today, as everybody has seen in the last few days that has following us, it's about profits. It's about profits first, actually. And it's about how to really maximize your systems, your finance systems, so you can enjoy from all that have you done in your business in terms of finances. And Johnny, you are the experts when it comes to profits first. And yeah, we always love learning from you. So without further ado, take it away, Johnny.
Okay, thank you. So let's see.
I need to add this one, of course. Here we
Yeah,
go. So now you
yeah,
see the slides. Here we go.
yes. So, hello everybody. I'm Jonny Boström. I'm the founder and CEO of the accounting and consulting firm Move by Numbers. We simplify international business in Sweden, and our clients are ambitious foreign companies who wants to run a successful operation in Sweden. What we do to support them is actually setting up their company, uh, performing their accounting, payroll, tax, VAT, all according to Swedish regulations and requirements, and also reporting to the authority. This ensures that they can focus on building their business and make it successful. Move by Numbers, the name. We are a bit strange in that sense that we try to and manage also to combine accounting and dance. We take the passion from the dance, bring it to the accounting to do it more energized and interesting. So, without further ado, today's topic is profit. What is profit? Let me elaborate a bit on that. This is a common question that I get from some of my clients. They say, "Ah, you said that I made 500,000 in profit. I don't really understand. Where is my money? I only have 10,000 in the bank. Where's the profit?" Well, if you have that uh, way of thinking, you're approaching it in the wrong way, because this is actually what we call cash flow analysis, trying to understand where did the cash go. And it doesn't always or seldom equals profit. So if we take a look at what profit is and what is the cash flow analysis. So to the left-hand side, you see that income, money in, and cost, money out. That gives you money in the bank. But in terms of following up a business in accounting, in taxation, you need to make adjustments. So here we instead talk about revenue. That is things you actually have earned. You have sold something, or you have delivered a service or a product. Then you take away the expenses, the cost. And this gives you profit in terms of accounting and taxation. So as I say, you could have profit in accounting, and this is sort of regulated by the different sort of frameworks. Depending on where you are, you have local frameworks, you have international framework for accounting. Then you have taxable profit, and that is profit that you calculate to the tax authority in your country. That can differ from the accounting and the profit in accounting. Then you have more relevant, could be profit based on your definition. What is the actual revenue? What is the actual expense? Because if you look in taxation and accounting, maybe they don't quite are aligned with how you define what is profit to you. Then, of course, you can follow up and see what is the profit per client I have and what is the profit per service. This gives you an understanding on where you have your best deals, your best business. The profit first methodology, it's quite simple actually, that instead of doing the old way where you do the accounting for a full year and by the year end, you sort of calculate everything and then you sort of, okay, this is what was left. This is my profit. With the profit first methodology, you start by defining, okay, what should be my profit? So let's say that you sell products and you say that 10% should be my profit. Then you go about and set up different bank accounts. So you have a specific bank account called profit from sales. And every sale you do, you put 10% of that sale into that account, meaning that you have sort of split the profit from start. This also way of thinking you also should apply to when it comes to taxes and VAT, because you know that already when you sell that I need to pay taxes, I need to pay VAT later on. So that can also be set aside to different bank accounts. And if I elaborate a bit on this as well, so what if I don't have like the actual profit is not 10%, it's less. If you have this way of thinking and working with a bank account, then you should quite easily and soon find out that, now I need to pay for the product that I've sold. I need to pay my suppliers. I have other things that I need to pay, like office rent and all of that. And if the money in your normal bank account is not sufficient, then it's a clear signal that, oh, wait a minute, I'm not making 10% here, because then you have to put back money from the specific bank account that was called profit and taxes and VAT. So that you will get a quick signal that maybe I need to check on my pricing. Maybe I need to check on this and this. And if you use this methodology, it's also that it's quite good that you can feel safe, because then you have this in ongoing this process, then you know that, okay, you don't have to worry about taxes because that is already taken care of. You have put that money aside. So you have that. So it's not an unhappy surprise by the year end that, oh, I need to pay this in VAT. I need to pay this as taxes. But let me get back to accounting. Because what is accounting actually? Well, accounting can be a system to satisfy the regulators, because they have like, you need to follow up on this, this, and this. You need to show this. You need to verify that you have these kind of purchases in your company, and that is how do you say? It belongs to the business. It is also a basis for taxation. But what many people sort of miss out is opportunity to use this as opportunity for you to have it as a measure, to measure your success and your goal achievement. Because if you put it like this, if you have I lost the thread. Yeah, if you only were to have the system to satisfy regulator and a basis for taxation, then it would suffice if you only had like 10 bank accounts in the accounting. And there is no need to go into depth and to sort of split different kind of cost if you don't follow up on it. To have like one account for stamp and another one for freight or postage or office supplies. If it's if it's not material, but you should instead take some time and invest what you want to follow up on. What kind of products, what kind of purchases do you need to have like a clear view on how is it going? So, as I said, accounting setup that should reflect your business. And you should set up the accounts, the cost center, products, and projects that is relevant to you. And if you because in accounting you can set up a lot of different dimensions. So not to overdo it, just think what do I want to follow up on? So you don't need to create this super advanced matrix where you don't know, okay, how should I put this? Keep it simple, keep it straight to the point, but make it relevant for you. And a good piece of good advice is to use an online accounting software, because nowadays most of them have clear interfaces to banks and authorities, and they also support you in calculating VAT, in some cases also taxes, and you can have a lot of different support from them. So what are the common mistakes that entrepreneurs make in respect to profit? I started by touching upon this, that say that many people think that money in the bank, that is the profit. It's not the profit, because it could even, if you only have one bank account, the amount in the bank can actually be that you owe, you need to pay the VAT, you need to pay the taxes, and already there, most of it can be gone. What also many people do is that they charge by the hour. That is typical for professional services like accounting, auditing, lawyer, legal people, and others. It can be quite hard to sort of set the hourly price, and a much better way is to actually see what value do I deliver to the client and agree on a fixed fee pricing. What many people also do is that they invoice in arrears, meaning after you've performed all of the work. This gives you, or this put you in the place where you actually act as a bank for your customers. Also, you should actually do the invoicing quite often, not only once a month after a month is done. So as soon as you have an agreement with a client, in best case, you do it upfront before you even start. And then you send the invoices. So our normal process in our accounting firm is that we send all the invoices the first day of each month for the work we will perform during that month. And then we, as soon as we get a new assignment or a new client, or we start doing like payroll, then we invoice it before we even start. Also, what you shouldn't do is that you need to have a plan. What kind of clients do you want to have? You should have like a checklist to see, does this client fit into your business? Could be questions like, do they need help? Can you help them? Do you want to help them? Can they pay for your services? These kind of questions you should ask before you take on a new client. And when you take on a new client, then you should have a plan for how to onboard them in a smart way, and also to make them a happy client to follow up on the way. You should also have a clear pricing strategy. how do we price these kind of services, these kind of products? And our way to think about this is we try to package things, and we always try to see, okay, the client asked for this. What is the value of what we deliver? How can we frame it like a package? And then have the discussion with the client and then set that up. And of course, depending on the complexity, on the number of transactions or numbers of different interfaces could be, then we have different prices. You should also know your break even. So you should calculate backwards. If I start with all my costs and also with not the profit, leave that out for now, but if you have all the fixed costs occurring every month, and then if you have additional costs like for salary, payroll, and others that are sort of could be go up and down depending on the amount of work, you should calculate backwards. How much do we need to sell? What is our break even? Because that will give you the insight and also create that you feel in control, that you know, okay, I'm quite okay because today we are like in the middle of the month, we have delivered this much, and I know that in a few days we will reach break even and the rest is profit. The last mistake, probably several, but on this slide and what I came up with is that you don't have any follow-up. You need to follow up the profitability of the services you deliver and the products. And you need to see, can you, if it is a service or a product where you don't make any profit, could there be anything else that sort of, how should I say, that still could be the reason for you to keep that service, to make it like a whole package, so that you already know and you have also agreed upon that I have some services with no big profit at all or even loss, but you need to know that and also be quite strict, I would say. So try to find the good apples and not to keep clinging on to delivering services that people maybe not see the full value of. It could also be like if you have a service or product that is not profitable, maybe you have not been so successful in setting up the price and explaining to the client what is the service we actually deliver. So if I take like taxation, to file the right taxation to the tax authority, no one cares. Well, actually, a lot of people care. Also your clients and your suppliers. Because depending on which country you are and what data is available, but it is good to know that you have all your documentation in place, all the filing is in place, and that is value in itself, because this gives you credibility for your clients and for your suppliers. So, how to avoid common mistakes? The first one, profit first methodology, I already touched upon, that you should have that kind of mindset. Can I already from the start sort of make this calculation to see what profit should there be and use the different bank accounts? You should set the price based on value delivered, and you should invest time in discussing this with the client to really understand what is the value that we have delivered. In our service, in our line of business, it's quite common in the old ways. I've done it myself several times, that while doing the bookkeeping, while doing the annual report, all of that, we suddenly see a mistake that was made prior year. I used to do like this. Hello, client. Yeah, now I'm done with all of your accounting, all of the annual report and the taxation. While I did your work, I also realized that, oh, you had missed some opportunities in the taxation last year that could save you 100,000. Here you go. Please consider it as a sort of bonus from my end. That is the old way. The new way is that you should, instead of just blurt it out, you should say, hey, dear client, now I'm done with your accounting and annual report and also the taxation. We noticed something when we went through all of your books and saw that you missed some opportunities from last year. It could possibly bring you 100,000 as not as a happy surprise that you will receive it back from the tax authority. How much is 100,000 worth for you? Could you take vacation for the first time in several years? Could you invest in that new product line that you were planning to? And have the client in their word express 100,000 mean this to me. And then you can say, so if you need our assistant, we were planning to charge you 5,000 to help you get those 100,000 back. Is that okay with you? Most of them or all of them will say definitely yes. Because even though it's like could be a 1 minute or 5 minute work for you, they are not paying you for the time you deliver. They're paying you for your knowledge, that you have the experience, that you could see that, this is an opportunity. So if you have like a quite fresh one in new accountant, junior accountant, working with this, they might have missed it. So that is the way of thinking when you have like sell the value of what you delivered. The next one to think about is that services should be invoiced at a fixed fee. And yes, it's super hard to set the fixed fee, but you need guts. You need to be brave. You need to really dig into it and just set a price, and then you can adjust it. So we have started off quite brave, and of course we have set too low prices in many cases, and then we have follow-up questions after like 6 months with the client saying, dear client, your business is like super amazing, but it's also more complex than we first understood. We need this increase in our fee to cover that. We need to also think about all of these things and double check this and this. You should also invoice upfront because you shouldn't be the bank for your clients. And if you have like 30 days payment terms or even less in many cases, could be in some cases longer, they will still have received the result of your work before they do the actual payment. So they still have time, if they're not happy, to hold that payment. You should do invoicing more often, at least once a week. And you should know your niche market and only accept your ideal clients. And also, you should be very, proud that you know your niche, you know the specific terms, you know their conditions, you know all the things to look out for in terms of accounting, taxation, all the pitfalls that they could stumble into, because you're such a good specialist in that niche. And you should have a clear pricing strategy. By that I mean you should have like a price plan, all of these services or your products, and you should have prices. And also set different prices depending on the conditions, depending on the complexity, number of transactions, or it could be other things. And start by calculating your break even for all your sales. So you understand, when I reach this, I'm break even. All of the rest is profit. And in the best of worlds, you are already using an online accounting software, and you should use the accounting to analyze the profitability for all the services and products that you have been delivered. So that was all that I planned to cover. So let's see if we have some questions.
Well, Johnny, thank you for that presentation. I have a couple of questions about the Profit First system, where if you look at all the businesses that you help and that you help install this system, what do you see in terms of results for them? What are the biggest results for this Profits First system?
They have a much better understanding on if they are profitable, if they have the right prices, so they can be more quick in act when things start to go downhill. Also, they feel they are on top of things in terms of the amount to be paid for VAT and for taxes, because that is already set aside. So they before we even go approach them and say, this is how much you should pay in VAT, they say, well, I already know.
Yeah.
So
is it as simple as just setting up those accounts and automatically dividing everything into those several accounts, or is there more?
could be, but it's you need to invest a bit of a time and also be quite strict with yourself to do this. Every time you get like a payment from a client, then you do the actual transfer.
Mm-hmm.
And I'm not sure, not any of the banks that I'm using, we can't sort of make that. Yeah, maybe you can. No, I don't think that you can do like set that kind of rules that does it automatic. So unfortunately, you need to do it manual.
Yeah, I
When
think
you sort of move it, transfer it.
yeah, I think for anybody that's watching this and that could already be a business idea, that you create an app or anything like that that creates automatic payments to these kind of accounts for sure. Now, if you're also looking at the businesses that implement this, and if you're saying you have fixed prices for your services, which is very scary for a lot of people, for a lot of businesses, in many cases they start too low, right? So
Yes.
probably they're already under, like they don't have any profit yet.
Yeah.
Would you say that businesses that then start implementing profit first tend to also increase their prices, because otherwise they keep being non-profit?
Both, I would say. Also, how you sell it to the client is that. So there's two ways to approach it. One way is to sort of explain how if you charge by the hour, how that works. So the worse I am, the more hour I charge you, the more I will make out of it. So
Yeah.
if I do it slow in a bad way, then I will make more money. It doesn't make sense.
Mm.
And I don't have any, how do you say, any incentive whatsoever to work on my efficiency.
Yeah.
So instead, so what you should do in terms of accounting, and also in many other type of business where you have this digitization and transformation and all of that, you should start by setting this fixed price now, when you have not fully digitized all of it, you don't have AI in place, and then you should set the fixed price, and then you should, together with the client, work to have it more efficient. So even if you lose some in the beginning, but we know that when we have set up this automatic feed, all of that, we still will have the price, maybe lower it a little bit, but not that much. Then we make money out of that. And also because then we have in incentives to
Yeah.
start to work with efficiency.
Yeah, that's a good point actually, where you don't necessarily need to raise prices all the time. If you become more efficient in what you do, you actually create more profit. You actually create more space for yourself, more margin.
Yeah. So if you compare it to like Tesla,
Hmm.
when Elon Musk said a Tesla should be like this, and he sell it for that. No one asked, how many hours did you spend building that car?
Mm.
It's irrelevant. They buy this car, they buy the brand, the technology, all of that in that. And Elon Musk and all of them working at Tesla, they have one focus: make the manufacturing, the production as efficient as possible, because that will make them more profit.
Mm. That's a good
So
point.
there is same way of thinking.
That's a good one. That's a good one. In our community, in the LGBTQ plus community, we get a lot of people starting out with their business,
Mm.
and a lot of them have sometimes fear, sometimes struggles, anxiety about finances, about profit, about the fact that they are starting to yeah to make their business grow
Yeah.
financially. What would your advice be for people that are starting out, that are in the situation about, oh my God, we don't know what we're doing, our finances, we don't know if this is sustainable or not? What is something that you say to these first time starters?
Start slow, be very strict with all the costs,
Hmm.
follow that up regularly. Also, today in my profession as an accountant, but also in many other line of business, today you have so much that you can do when you're a small company, because there are so many good services that is either free or basically very cheap,
Hmm.
and you can deliver very good services, but you don't need to invest like going back 10, 15, 20 years just to sort of have electronic invoices. You need to invest millions. You need to be like a major company to have that. Nowadays all systems have that.
Hmm.
So it's basically nothing. And then of course it's another way of pricing it, that they charge you per transaction instead. So I would say piece of advice is that is why I emphasize that you need to know where your break even is.
Mm.
So when we help a new company establish, so done this several times. Uh, the first thing is, okay, we have this. They have some financing, and they don't know, okay, how far will this take us? And then we sit together, we make a budget, we go through, okay, what expenses do you have month by month? So when they leave that meeting, they know, oh, it feels so good, because now we know that we can spend 5 months to go out and market, try to get clients, all of that,
Mm.
because that is how the time period we have that our financing will cover. And then we can see, okay, by that time, if you have this many clients, what will that take you? So you need to sort of think in a realistic way, and also maybe create different scenarios depending on if you are successful or not successful at all. So when you need to make sort of how do you say uh, decisions along the way, uh, to decide, should we continue, do we need to revise our business, what should we do?
Why do you think, Johnny, that a lot of people, that a lot of business owners are so afraid of doing that work around building a plan around finances, building some strategy? Well, why is
Uh,
there so much resistance to doing that?
I think that they are probably feel that they don't know how to do it.
Hmm.
There is good help to get. Either you can contact someone like us, or you can also, because you have like a lot of different sort of both governmental bodies, but also other associations that have templates for how to calculate and how to think. And nowadays, with internet, and you have a lot of knowledge you can get there. So it shouldn't be that hard. You just need to have invest some time in it and also have some interest in it.
Hmm. So it's really about taking the action and not being afraid
Yeah,
to ask the questions to the right people about what you're doing, what you should be doing.
yeah,
And I think also that's where we come in and where we do these sessions to keep educating people how important all of these pieces are.
yeah.
So I want to thank you, Johnny, for sharing that advice, for sharing your knowledge. And if anybody has any questions for Johnny, please put them in comments or join us in the Island Proud Business Hub, where you can also ask your questions and get even more information about anything that you need to keep growing your business. Johnny, thank you very much again for today. We will
Thank
see
you,
each other
Stefan.
very soon again. And for
Yeah,
now, thank
hopefully.
you, everybody, and have a
Thank you.
great day
Yeah,
and see you later.
see
Bye,
you later.
Johnny.
Bye.
Bye.